long time no see.
Yeah, it's great, Nikunj, and thank you so much for inviting me. And I'd like to wish you, the team, Itina, and all the viewers, a wonderful New Year 2023. I think it's going to be an amazing year for all the investors. Maybe not in terms of Nifty or index movement. It's going to be a very comfortable year. There is no doubt about it.
Why do you say like that? Why do you think it would be a comfortable year for a stock picker like you?
See, on the macros now, all the smart guys out there have been talking about the India, being in a sweet spot in an otherwise challenging global environment. I think India is, at the beginning of a massive scale up in its size of the economy, the per capita GDP, the per capita income, and the wealth over the coming years, the coming decade, I would say. So there is no two thoughts about it. Everybody is agreeing to that. So how equity investors are going to make it? So you have to believe in equities, and it is a proven thing to make long-term wealth. There is nothing like equity, So I think it's going to be a wonderful year in that perspective.
Porinju, the space where you've invested traditionally is the mid and the small cap space. And over the years, there has been a big shakeout in the small and the mid cap space. While 2022 will be remembered as a year where PSU and a lot of mid cap banks made a comeback, it will also be remembered as a year when fintech and a lot of mid cap IT stocks they took a whack. What, to your mind, from the small and the mid cap space will be the highlight theme for 2023?
We continue to be in that space, Nikunj, even though sometimes we have moved occasionally to larger companies like Tata Communications kind of stocks or Tata Beverages, the Tata Consumer, which we are out already. So, but the focus is on, looking at emerging stories and turnaround companies, and especially with regard to the management perception, which I used to talk always about. We haven't changed that at all. Of course, we had, mistakes. Mistakes is, it's an integral part of equity investing. There is no escape to that. There is a risk. There is risk day in and day out. We have to live with that. But that doesn't mean, people with investable funds just avoid equities and buy into real estate or FDs and gold. I think that era is over. India is seeing a tremendous change, a structural change in terms of the stock market structure, I would say. There is, we used to have, in the 90s, the brokers were very powerful in the market, opinion makers, and they used to control the markets. Then we moved to an era of where we used to go to follow the HNI, the fancied investors, operators in the market. Then again, the time came, we moved into the funds, DIAs and FIAs, and some of the star fund managers used to, have a big say in the market direction, in the valuation aspects. And I think we used to depend a lot on, we used to debate about FIA buying, selling, and how domestic investors buying, selling. So that, I think we are getting into a different orbit now as stock market, the capital market system. There are millions and millions of retail investors are coming into the market. There are multiple players in the market, not just one, two, or three, different formats. There are mutual funds, of course, is going stronger. There are PMS, AIF, family offices, hedge funds. There are multiple, manifold, sectors within the stock market, and the regulators are doing a great job. I think more and more regulation coming in. Some of them sometimes we may dislike because we find it is a little complicated. But ultimately, these are going to lead to a very strong stock market system, and the process And now many very wonderfully performing mutual funds. Nobody knows who is manager, who is the fund manager. Without the fund manager's name, there are large institutionalized fund management is happening and performing well. So this is something, structurally, system-wise, we are into a wonderful, well-grown, mature capital market in India. And on an economy front, we have all those aspects. All the experts in the market, they have been talking about all these things. We have various things, general aspects like the young population.
Right.
We talk about the wonderful large-scale reforms happening in the country, a complete cleanup of the banking system, which is very important. A lot of people are underestimating that. It's not a small thing. And, see the multipolar geopolitics happening in the globally, it's helping India tremendously in various aspects. So there are a lot of that, and stable politics. We have been going through some steps.
Fair point. You've laid the architecture very well, Porinju, in terms of why you should be investing in equities, why the appeal to investors in terms of the India story and the underlying dynamics, and how regulation and how the on-ground surveillance and other reforms are active. So my question is that somebody is watching the interview, he says, okay, I completely endorse what Porinju has to say in terms of the India appeal and equities where I want to be in. But every fund manager, and I've known you over years now, so I'm taking the liberty of using my past experience here, follows the anchoring theme. There are a lot of themes happening in India: manufacturing, financials, IT, even consumer. What is the anchoring theme of your portfolio for next 3 years or next 5 years?
I think the industrials is something, when we say industrials, the manufacturing, the defense, perhaps our infrastructure. I think we have been going through not so great times in the recent past, or maybe last decade. So that is basically turning around with the new themes and initiatives and the reforms happening. The Make in India kind of things. So that's something going to really help equity investors. That's one segment, a macro segment, I would say. Investors should focus in the coming years. There's a lot of money to be made, a lot of wealth to be created. But if somebody is looking at, to make money in next month or next quarter, I don't know. And even 2023, who knows? It's going to be creating a lot of wealth for shareholders. It's not that predictable. I don't know. And I don't think anybody really knows it. So any such kind of predictions can go wrong. So I think this is one aspect. And we had the IT and pharma, which was beaten down in the last many years. I think that sectors, IT and pharma, is time to start looking at it. There's no hurry. But it doesn't mean every stock in the sector is going to go up. There are wonderful pockets of opportunities in those sectors, I feel, for the next 5-10 years. So I think India has more than sectors, the cherry picking of stocks, the selective stock picking. It's even 2023 is going to be rewarding. There's no doubt about it. I can go wrong or anybody can go wrong in predicting the index, but that trajectory of wealth creation or returns, it's going to be definitely very, very positive in 2023 and the coming years.
Coincidence that you have a lot of Tata stocks in your portfolio. You've specifically mentioned two: Tata Elxsi, which you sold, Tata Consumer, which I think you had, and then Tata Communication, what you currently have. Just a coincidence?
Not really. One of our largest holdings is Tata Communication. Did not perform much in the last 1 year, if you see. I think some 5-10%. But we believe in this stock. It's one of the Tata companies, and as a technology company, it's not just the voice and data infrastructure company. It's going beyond that. That's what the management is guiding, and the kind of resources they have been investing in the company, and the kind of human resources what is brought into the company, and I think this is one company one should bet on. It's around 35,000 crores market cap. I think it's very good, but the risk is there all around. Any equity anywhere. So I'm not telling as a foolproof, but one of the very good companies among mid caps, for investors to look for. We continue to hold the stocks. Of course, we have been buying the stock from 300, 400 onwards. Now it's around 1,200, 300. So there are many Tata companies. We exited Tata Consumer last year, and Tata Elixir also we had exited. The Indian hotels we exited a bit early. There was a big rise afterwards. So Tata companies have been doing very well, but we can't expect the kind of return in the last 2-3 years in Tata Group companies, which is not sustainable. It was very amazing growth, but there are pockets people should be looking at. Now, see, one thing I have been looking at is some of these people say the old economy stocks. There is a dramatic transformation happening in some of those old established legacy companies, legacy businesses, asset-based. So people have been all going into the fancied IPOs in the last 2-3 years, which were in general overpriced, highly overpriced, some of them, comparing to the listed companies in the same space, same well-managed companies. So that's something I used to be surprised about. I am still surprised. The reason I bought Raymond's 1.5 years ago, 2 years ago, in 2021, the maneuver, I'm just telling an example, not recommending any stocks. The maneuver was planning an IPO, it was in the newspaper, it around 20,000 crores valuation. It's a good company, of course. But, when I see the size, the business potential, other aspects of the company, I was comparing it with Raymond. So Raymond was available at 2,500 crores, 3,000 crores, when Maneuver was planning an IPO at 20,000 crores. So it was a huge surprise to me. And I would say Maneuver was just like a fraction of Raymond. But this may be not very straight comparable businesses or companies. I'm not telling that. But there are points to compare. There could be issues about the management perception among the investing community. And so, but in any case, the new issues, it was over fancied. Everyone, most of the market players, even retail people were going after them. And I think a lot of them had to pay a heavy price. Many of these companies, they were already overpriced at the IPO valuations. From there, it has gone 2 and 3 times, some of them. And now they are all coming back to earth, to normal valuations. I think some of them are yet to correct further. They need to correct further to come to real reasonable valuation at par with the other earlier listed companies. So this is another opportunity. I'm talking about some of these, the old established legacy companies and businesses. Investors should look for in 2023 also.
So where do you see this combination of a disconnect in terms of valuation versus growth, or disconnect in terms of management and business perception versus the underlying strength of the business?
See, the valuation and growth, people always, balance it, and it's based on the growth. But there is, in the last 2 years, when we had this move from the bottoms of 2020 pandemic time, I think many of those valuations in many companies, it has gone crazy. They have been wrong, and it may take maybe 3, 4, 5 years, some of them, to reach that valuation again. They are wonderful companies. They are growing very big, very well, superior to the other companies. But for everything, there is a price, Nikunj. So people, it's a strategy to buy. Nothing wrong in that. Every fund manager has individual strategy, very unique strategies, and but for everything there is good and bad times. So getting carried away is one issue in valuations, and Getting carried away with the small caps is another issue. I had it in my 2018. I got carried away, and I've paid a heavy price for that. And the investors who invested with us in 2017 at the peak of that small mid cap strategy, some of them are yet to recover, fully. So this basically people make mistakes on the valuations, as you rightly was talking about the valuation and growth. So it's a very tricky thing. That's why equity is such a most dynamic investment avenue. There is no certainty. There are risk, and there is reward. And I would say when you look at doing some kind of exploring equities and understanding businesses, and you invest for longer term with a reasonably diversified portfolio, somebody creating it. See, in that aspect, for long-term investors, equity is not risky. So if that basic principles to be followed. I also had some, highly concentrated bets in not so proven companies, and that's why that 2018 happened. So we have made very significant changes in our investment philosophy, but the basic investing philosophy doesn't change. I'm talking about, that some little repairing here and there, and that has really helped us later. And we are with full confidence and moving ahead very well.
So good to hear that. We've seen a massive re-rating in the value end of the market. Banks, defense, railway stocks. Is that one-time re-rating which happened because of because of rising interest rates and growth stocks getting re-rated? From a market standpoint, is that over? Or you still feel that there is money could be made in buying small PSU banks, PSU stocks, railway stocks?
These all are a bit cyclicals in my understanding, Niranj. Now the PSU banks moved some 70% this year. So that doesn't mean that investors should go out and buy PSU banks for next year. I don't know that way. They may be looking very underpriced, looking at the past price movement last 10, 20 years. Some of them are still quoting below 10 years, 15 years ago valuation or price. So this 70% 1 year movement should not excite anybody for the future. I'm not telling bad or good about banking sector, but this happens across sectors. Now the railway stocks and all, I have burned my fingers a few years ago, looking at that, Tata wagon and all those kind of stocks. Of course, we are holding BEML now, Bharat at Movers. That's one theme was the indicated PSU disinvestment. So there could be pockets of opportunities in all these kind of cyclicalities and structural changes and the growth stocks. Opportunity is there all over. Similarly, risk is also there all over the space.
I'll go back to this whole idea of yours of management perception. Now, exactly a year ago, the management perception for some of the fintech and the consumer tech stock was very different. They were considered as entrepreneurs who understood growth and the model of New India. They were called as great incubators with big ideas, which would be which will drive the next phase of growth for India's economic growth. That was the image for some of the startup and some of the consumer and fintech owners or promoters or founders in this case. But now the management perception and the market positioning for some of these stocks has changed. Markets are raising concerns about cash flow, high growth but no cash, high growth but no focus on EBITDA. Is it a good time to buy into some of these stocks? Because if you look at the management perception in the last 1 year has changed 180 degrees.
See, the biggest challenge in the past has been this management perception. And, it was true that investors, the fear about promoters or the management action, whether they will accommodate and take care of the minority shareholders in creating and sharing the wealth. So that was real serious concern, but that is significantly changing, Nikunj. There is no doubt about that. now very the crooked kind of promoters and management, it will be difficult for them to survive. And because it is so, the system is so transparent, regulatory is so much aware about things and doing the right actions, and creating regulations. So the whole landscape is changing for the for the promoters and management to use the listed companies for creating wealth for their own thing, and for cheating investors and looting investors kind of thing. I think that this will be the past in the very soon. We will come to that kind of a level. There are still many small and mid cap. Why there are small and mid cap companies? Many of them have this issue because the small and mid cap is very large in number. We have only few companies for blue chip large company. So it is quite, there are bad promoters and in large cap companies also. Sometimes we have come across mismanaged companies, or indulging in various unethical practices without taking care of the minority shareholders. All those things are there all over the space. Here, I think in 2023, investors should not ignore the old economy companies just because the promoters may have a history of not managing the company ethically and honestly. One has to be watchful whether there is any dramatic changes happening, a paradigm shift is happening in the vision and the behavior of the promoters management. Provided all these things are valuable only if the business is valuable, it is futuristic and future relevant. Otherwise, there is no point in even attempting to identify those promoter quality. So the turnaround in the management quality is one theme. It will continue to play. I played it a bit early in 2016-17, and I had to pay a price.
We all live and we all learn, and you've been very candid in sharing your experiences in your journey as a fund manager. Yes,